quick introductions, please?
Sure. Thanks, Saurabh, and hi to everyone out there. Myself, Dr. Vishal Bansal, currently an independent consultant and into entrepreneurial mode. However, in my last opportunity, I had the privilege to invest into 20 startups through the organization Health Start, which I led. Good 5-6 exits and invested in others currently. Thanks.
Wonderful. Akhil?
Hi, greetings to everyone. My name is Akhil. I'm a partner and director at BCG based in Shanghai, China. Been in consulting for the last couple of years, but prior to that, spent a lot of time in private equity, focused across sectors, first with TPG on the operation side, and then KKR Capstone again, focusing on operational improvement and supporting investments across sectors and geographies. Prior to that, about 10 years working with great management teams in line roles. Happy to be here and look forward to the engaging dialogue.
Zafar?
Thanks. This is Zafar here. I have an interesting career because I've spent time in startups as well as working in consulting and corporates. For last 10-15 years, I've been into consulting. Right now with Accenture as a managing director for Southeast Asia, based out of Singapore. I'm focused on finance and CFOs in general across the board, and healthcare and public services is one of those focus area where I've been spending my time in 5-6 years. In last 20-25 years of my career, I think I've seen so many ups and downs, but I must say that what COVID is going to bring in to our doorstep in the next few months would be completely different than what we all have experienced in the past. So it's an interesting conversation. I look forward to have a good chat with the panelists. We have very nice panelists here, and the audience will join for the questions. Over to you, man.
Thank you. Nav?
Hello, everybody. My name is Navjeevan Khosla. I lead the Southeast Asian markets for Quadria Capital. Quadria is one of the Asia's one of the largest healthcare-focused private equity firm. Prior to joining Quadria, I was the head of Fosun Private Equity in India. Fosun is a Chinese conglomerate whose core business is healthcare. I set up and ran the team for Fosun Private Equity in India. Prior to joining Fosun, I worked in different global banks, Bank of America, UBS, and Merrill Lynch in Hong Kong and India, and mostly on the investment side.
Wonderful. Dr. Sachin?
Hi, good evening, everybody. My name is Dr. Sachin Gupta, and I'm founder of a company called Salus Healthcare Resources. We are the foremost leadership advisory firm in India's healthcare sector. Prior to that, I've been working with a company, Singapore-based company called IHH, which is world's second largest healthcare provider. Also, their business representative for India Ops from 2010 to 13, after which I started Salus. I am also a keen observer and investor in equity markets, both primary as well as secondary equity markets. That's about me. Saurabh, can you introduce yourself also?
Yes, absolutely. So I'm Saurabh. I'm founder of a healthcare startup called Meadow. We are the largest outpatient care chain in India today, and we started about 2 years back. Basically, trying to bridge the gap between the physical and the digital space when it comes to outpatient care, and kind of try and make it seamless in one stop, right? So that we can bring in timely quality care into the entire process, I think, which is the biggest drop point in India. And I think as a startup founder, I'm going to be primary consumer of all the knowledge that we all share through the medium of this conversation today. So I am also very excited, and like I had promised when we began, or just before we went live and began, is I'm actually quite excited by the great mix of people and personalities around the table today, because I think there cannot be a better coordinated set of people to address the problem from all angles. And with that, I think from a clinical perspective, I think everybody is having this question in mind: where do we find ourselves in the middle of this pandemic, in the middle of the curve? Have we kind of seen the peak, or whatever it is? So maybe I'll bring in Dr. Vishal first, and get you to don your clinician hat, along with all the others, and just help us gauge where we stand and what to expect.
When it comes to clinician, Saurabh, thanks for posing that question to me, but it's way back in my career. However, even I think it does not require me to be a clinician to understand to certain extent how the trends have unfolded in different parts of the world. What we see currently, I think we are just starting in sort of the phase 2, as somebody was defining it, where we all seem to now know somebody who knows somebody who has had COVID. To me, there are stages which we will pass, and there will be the next stage where we know everybody who's had, everybody of us knows somebody who has had COVID. Then we'll know somebody who has probably not been so lucky to survive this onslaught, and so on. And till the time when we all of us know that we had probably and we still survived, that might be the last situation. But that might be still the end, with might be for 50 to 60% of us. So we are just stepping onto a very accelerated phase. Probably different regions of the country would have this in different formats. The metros might pass through this stage earlier than other parts of our country. Delhi, Mumbai, Chennai, Ahmedabad, some of the areas seem to be a little ahead compared to others in this curve. But to me, right now, it seems that there might not be an escape from what is coming. The vaccine or any significant treatment, a treatment is, would probably help in some level, but not really be a cure. A vaccine might be at least 6 months to, actually, realistically speaking, 9 months to 12 months away. By that time, most likely we would have a significant portion of herd immunity acquired. I would say probably 25 to 30% infection would have happened probably at that time. But all of these are estimates or guesstimates at best as of now. The onslaught from the disease, of course, has been health-wise. It will be mental health a lot. We have already started witnessing some of the economic challenges. But coming to a little more from my viewpoint on our specific asset class in healthcare, specifically at the very early stage, which I have operated on, I do see a change in focus coming in the startups that we see. We hear the words mental health, telemedicine, early detection opportunities, stopping of infection opportunities, probably getting more traction. Some of them might even survive the COVID wave, and we might see them progressing forward. While the number of startups might increase in this space, not sure how many will get investment. The investment scenario overall has been challenged, people holding up to their cash in the period of uncertainty. Healthcare might have a little more effect than the others. While there is a lot of interest in healthcare, typically the earliest of the stages receive investment from people experienced in that industry, in which we call as the angels. However, in healthcare's case, that specific segment, the angel group, might be affected a little more. Our healthcare businesses have been down much more comparative to many other segments. And this group of people has been more cautious. So only when they really feel comfortable and have idea about things, then they would be ready to put in money in the asset class that we are talking about here, especially the early stage investments. So we might see a challenge, the crunch at the earliest of the stages, much more than the latter stages compared to relative to the pre-COVID times. So that's the second scenario I would see. As we move forward, there's a lot to speculate, and it will be a speculation only as of now, even on my part. But I think some of the themes that I just mentioned are going to stay. The higher end, bigger ticket size investments going into more mature companies or in the hospital sector specifically might be less affected, but there are people who can talk much more in detail about that. I guess
Right.
from my side, that would be a starting point here.
No, wonderful. Thank you. And actually taking one bit out of what you just mentioned, Zafar, if I may bring you in and see, what is the first lead or lag indicator? Actually, at this point, we should potentially only be talking about leading indicators. Yeah. Of the economic impact, whether it's on consumption, whether it's on mindsets and behaviors, and what are we seeing, or what can we potentially expect the next year or two to come? That's why I think you're on mute.
Thank you for that. So let me start by painting the picture exactly what's going on globally, and let's focus on Asia. And we've been doing a lot of research in the recent time, and everybody is trying to scramble data, right? We're trying to guess to the best possible scenarios. One of the guesstimates that I have in front of me now is almost 83% of the listed companies have a declining margins and a very high debt on the books. Now, 1 in 8 companies will definitely have a cash crisis in the next 3 months. That's the headline of how the industry is going to go through this entire crisis in the next few months or a year or two. Now, there are 8 things that is happening at the same time. Particularly looking at this investment stage, and which is a focus of our conversation today, is being the startup community. We need to look at where these investments is going to get stalled, right? Start from the impact on the economy. If you look at the overall consumer behaviors, there would be a dramatic shift, the way they consume things and the way they're going to invest or spend the money on. But the pre-stage, the pre-seed and early seed conversations that happens for the startups, that is going to be the severe impacted segment of the entire value chain for industrial economy, right? That's largely because the friends and community will be gone. The angel investors are going to hold the money completely. The VCs and private equity firms will be looking at it in a very safe havens. And then what happens is, towards this entire process, you will lose out a huge amount of innovation that is required for us to actually propel out of this entire crisis. And we're going to have this problem in next 6 to 8 months. But during the 6 to 8 months, I'm pretty sure there would be a rebound. And that rebound would be taking a new shape, and we call it as a new normal as such, right? Now, the new normal would be completely different to whatever we have been ever experienced to. Now, new normal could lead to investments in the areas which we have never thought about it in the last 3 years, and would be the prime investment areas for the next 5 years. And healthcare is no silos in that particular case. We're going to have major investments flowing in, as per my reading of healthcare industry in this Asia Pacific, for the next 6 to 8 months. But this month, 6 to 8 months will not go directly to the startups. It will come over a period of a year from where we are for that to unwind, and then you have the new normal emerging. That's my take on it. And if you look at this, the story, what's going on across the globe, we are at a stage, companies who are doing well, especially on the consumer sectors, and to a certain extent, healthcare providers have been on a beneficiary cycle, will start looking at what are the new ways of how they could control the newer startups and ventures that are going to come forward. And that would be an interesting phase to look at it, where the money will flow. So I'll stop there for a minute, and then we go around the table, and then we come back to this specific investment topic in a while.
Sure. Thank you so much. Akhil, if I may kind of also get your inputs on this question, and also try and see if we can contrast what's happening in Asia versus, are there a couple of leaves that we can take out of experience that we see down, or not down, maybe out west, and is there somewhere where we can say that in Asia, specific India, Southeast Asia, are we slightly better prepared, worse prepared to deal with what is coming through as well?
So I think having lived through three similar crises in the past, when I say similar, nothing is exactly similar, but exactly same, but similar. So one was the SARS crisis. And then, there was the financial meltdown of 2008. There was the post-September 11, challenges in the global markets. The one thing to understand is there is always light at the end of the tunnel. Second thing to make is folks who understand how crisis will accelerate a few trends and do something will come out stronger than those who wait and watch how things will unfold. And three is use the current opportunity to pivot yourself to a new normal, as even I think Zafar and other panelists mentioned. What does it mean? To answer your question, I think the answer lies in dissecting the environment in broadly two dimensions to start making sense. One is by geography. For example, China is in the post-crisis ramp-up phase. India, one can argue, from my vantage point, is still in the phase of trying to flatten the curve. And some geographies in, say, Europe, say Italy and Spain, are coming out of the space from a recovery standpoint. And then within these geographies, if I can make a spectrum, there are industries that will probably be more impacted than others. For example, travel tourism, one may argue, would be the most severely impacted, and the hospitality industry and the cinema industry as an example, versus healthy food, healthier lifestyle, biomed and pharma, medtech may be positively impacted because of a pivot towards more healthier lifestyle, whatever have you. So when you cross-sect these two intersections of geography and the sector, you start making sense of how this will unfold. And then coming to the trends, I think for entrepreneurs in India, this is a fascinating time and early stage to understand how different geographies are pivoting and what are the trends emerging. For example, how is China evolving and what are the trends that can give a 6 to 9 weeks to 3 months early heads up to how things may evolve for some startups in India as an example. And there we see a lot of excitement. And I'm happy into the detail as to how these will mean specifically for specific industries and sectors. But I think the beauty lies in the intersect of this cut rather than a broad statement.
Yeah. No, wonderful. Thank you. Thank you for that. Now coming to you, how do we view it from a dominant healthcare lens, right? I know you've had experiences with late stage companies who are doing things like vaccines and big pharmaceutical organizations, and having seen even the early stage to mid stage growth investments. How do you see all of these impacting? And honestly, I think one thing I'm still not very clear about is about the economic impact on consumption, and thereby does health still find itself, or healthcare as industry still find itself inert to consumer behaviors, or how do we kind of perceive and see this through?
Thank you, Saurav, and thank you, Voice of Healthcare, for the opportunity. I think it's a very interesting mix of panelists, and I think we are already listening to a lot of interesting views. As Mr. Puri mentioned, I think I have worked in both India and Southeast Asia, and I can give you some perspective of how things are happening in Southeast Asia. So India, as you already know, I think is still trying to flatten the curve. And on the other extreme is Singapore, which has practically, I think it's closest to New Zealand, which has kind of totally, booted out the COVID. I mean, in Singapore, for the last 5 days, we had only 1 or 2 community cases every day. So they have practically wiped out COVID. There are a few containment zones, but those containment zones are very, very strict. They are of migrant labor. So keeping that aside, in the larger community, Singapore has practically kind of wiped the COVID. And what they have done is two things. First is the pace of testing, which has ramped up. So they have practically tested every household. The second is the tracing. They were so perfect in tracing that when they found a person, an infected person, within 3 days, they could actually trace all his contacts. So the tracing and tracking in Singapore was of the highest quality I have ever seen in my life. Coming to other countries in Southeast Asia, Indonesia, like India, is struggling. And I see the numbers or the trajectory in Indonesia going the same way as India. Malaysia has crossed the peak, but the numbers are still quite high. Vietnam and Philippines have been aggressive and they've opened their economy. And interestingly, the numbers are coming down. Vietnam has actually been, a lot of people perceived Vietnam to be, a country which is impoverished and poor and less infrastructure in terms of healthcare. But the country has done fantastically well. And Philippines also is on an improving curve. So every country, the basic underlying theme for all countries which have done better is basically testing and reaching out to people, and obviously imposing the social distancing, which India has also tried to impose. But I found tracing, testing, and then quickly eliminating as the three steps which have actually helped these countries out. Now, coming to your question, in terms of our outlook in terms of investments in the healthcare sector, I think there are two types of, obviously, consumer behavior. One is a necessity, and one is obviously which happens in your disposable income or something which you can avoid. So what we have seen in the last 6 months is that all the elective surgeries have come down. So a person who wanted to go out for a dental treatment, for some aesthetic stuff, all those surgeries are out. Okay, so we have seen in Singapore, Thailand, to some extent Malaysia, are countries where a lot of people come for aesthetics and elective surgeries. And those institutions which were doing only elective aesthetics and dental, orthopedic, all that stuff, that has come down. So that is one clear trend. I think that will happen for a sustained period, where people will start postponing the elective surgeries because of the income going down, and also the fact that you will have lesser institutions tackling those electives now, because a lot of these institutions have been wiped out in the last 6 months. The other thing where things will go down, I'm telling you the negative parts of this first, is medical tourism. So Thailand in Southeast Asia is a country where people come for IVF, aesthetics, people come for cosmetic surgery, people come for even sex change. All the medical tourism industry as a whole has suffered quite a bit. So we can see, and we had a few, distressed sellers, you can say, of institutions which came to us, and we could see that industry will also take some time to recover. I am bullish on that industry, but I think from short to medium term, I think it's a struggle. The third thing where I think is a little bit negative is bigger hospitals. Okay, because the thing is that your asset size is really high. You have a lot of inpatient care, and what we used to do, or what bigger hospital used to, is to cram people and cram beds and try to eke out revenue, given the fact that you have these Ayushman things and government insurance, etc. So what these people have been doing is cramming beds and trying to take revenue up. But with this social distancing and with this very strict protocols being there, I think it will become very difficult for the bigger hospitals to make returns profitably, because they have a huge asset sitting on the balance sheet which is not producing returns. Okay, the revenue has gone down, electives has gone down, and that's why I see bigger hospitals, as mega hospitals or big inpatient stuff, not returning too much. So we are very, very kind of cautious on those things. Now, coming to the positive part due to COVID, I think, as has been mentioned out, tech adoption, and healthcare analytics are two health informatics and analytics are two clear winners. Telemedicine obviously has basically crossed the tipping point in this COVID. I think telemedicine is here to stay, and people, my relatives in India and other people here or in Indonesia, I know have benefited immensely from telemedicine. I think I myself was a little bit skeptic on that, but I think this crisis has made me a believer of telemedicine. I think that is something which will keep going on. The other thing is that the e-ization of every services. For example, e-pharmacies. I think as the regulations become clear, and the fact that people couldn't go out, so they ordered medicines, they ordered all the essential services. I think that will become a part of consumer habit now. Instead of going out, people now have understood that you can get things home, and even medicines for chronic care. So I think e-pharmacy as a concept will go up. I am a huge skeptic of the regulations in e-pharmacy in India, because that draft has been circulating for the last 10 years, and still you do not have a proper regulations in e-pharmacy in India. If the regulations become clear, and if the regulations is supportive, and if the regulations is free of all the lobbyism from all parts and from all the stakeholders, I think it's something which will definitely provide returns for the investors as well. The other part, the other 2 or 3 parts where I'm really bullish is, first is diagnostics. Okay, because people have now understood the importance of diagnostics given COVID now. Okay, instead of people waiting for the doctor to push them after they have become sick or something, I think there will be a tendency of people to get tested. Okay, so diagnostics both, I think I am a little bit bullish on pathology rather than radiology, but I mean, let's not go into subsectors, but I think diagnostics as a whole is something which will definitely be on an upswing, both short term, medium term, long term. I think I'm really and you can see from the market. I mean, Dr. Sachin, you have been in the secondary and primary markets, the kind of deals which have been done in the diagnostic sector, as well as in spite of all the market crashes across Asia and India, obviously, the diagnostic valuations have not come down. So I think that is a trend which will happen. The second thing which will take place, and one of the trends which will happen is the ambulatory clinics. India does not have right now a very set structure of ambulatory clinics, which Singapore does have because it's a developed economy. But any corporate or any organization which can set up an ambulatory clinic chain, I don't have a business model with me, or I haven't thought about a business model, but there is definitely a business opportunity in setting up ambulatory clinic if you can manage that business well. I think that is the shift will happen from the bigger hospitals to ambulatory clinics, which are far more accessible and which are far more safer. So that is one thing which will, I think, definitely happen. I think I've covered most part of it, but I think generally chronic care and infectious diseases would be the key focus areas for pharma companies. So pharma, I'm definitely bullish on pharma on a longer term, but I think in the shorter to medium term, pharma companies who have molecules or who have products on the chronic care and infectious diseases obviously will be the immediate or medium term beneficiaries. So those are I think I've outlined most of the sectors which I like and don't like. I think we are evaluating deals in these sectors, and I think there are definite business opportunities there.
Wonderful. Thank you so much for such a well broken down view. Dr. Sachin, coming to you, and with you, I would say also coming closer to ground and seeing how are thereby things happening, and how the reactions really shaping up, like Nav also mentioned, whether it's from diagnostics perspective or other segments within healthcare. What do you see?
Yeah, so I'll start, with the what Nav said just now, regarding consumerism, and we'll see, some fall in consumer demand in next few months. Because right now, if you look at secondary equity markets globally, I see a lot of disconnect between, the Wall Street and the Main Street. While the Wall Street is on recovery track, the Main Street and common people, they are suffering. There have been massive job losses globally, not not in a single segment, but across the world, across industries. So I think there is a disconnect between equity markets and ground reality. So I'll actually be cautious, and I'll like to advise people who are our viewers today to stay away from equity markets, listed equity markets. You know, I see valuation on the higher side. In next few months, we'll because of massive job losses, we'll see a lot of NPAs, especially coming out in mid-income section, or the lower income section. So all the banks which have exposure to these kind of instruments, so they'll be affected. So this is just the beginning. We need to be very, very conscious. Having said that, this pandemic has actually outlined importance of healthcare, and there are many opportunities. For example, I mean, if we talk about sectors other than healthcare, Zoom is a fantastic example, and we have seen stock of Zoom performing very well. If we talk about healthcare, so I'll divide healthcare into 5-6 segments. We talk about pharma, which is first segment. There is a lot of opportunity for high quality generic medicine going forward, and R&D. Countries like India, which have huge population base, they also have a huge opportunity to accelerate their R&D programs, and invite pharma companies from US to do trials in India. So that is going to be ramped up in next few months, 2 years. If we talk about clinical specialties, psychiatry is one branch whereby we'll see a lot of upsurge coming in next few months. I mean, already we have seen suicide rates going up. We have seen a lot of demand for psychiatry. So amongst all the clinical branches, psychiatry, which was being neglected so far, is going to be a key branch or key clinical specialty. If we talk about overall healthcare, I think tech-enabled healthcare companies which can provide efficient healthcare solutions, just like Nev was just saying that the larger hospitals are going to suffer. I'll second him, and I believe that brick and mortar models, they will be having middle term pain, short to middle term pain, whereas technology enabled healthcare delivery models, they'll be more successful in near to mid term to long term, because somewhere technology will become pivot of how we deliver healthcare.
Right.
mHealth is one such segment, telemedicine, AI. So all these are areas. Having said that, one of the related areas, is we are actually talking about uh, COVID-19 pandemic. Same time, we are actually having a pandemic of lifestyle diseases, along with the pandemic of cancer globally. So there is going to be a lot of focus on holistic medicine, because even in COVID, we have seen whereby there is no clarity whether a particular medicine will be affected. Yesterday, I was speaking to head of emergency medicine at a large hospital in US, and they were telling that they don't they are not prescribing same treatment regime as in India. So there are variations how we are treating COVID in India versus Southeast Asia versus UK. So there is no clarity, but yeah, one thing which is very, very clear is uh, people are actually looking at holistic medicine. They are combining traditional, I'll not say traditional, but modern allopathic medicine with the conventional treatment methods like yoga, or even TCM, which is traditional Chinese medicine. And the outcomes have been better when the countries which actually imbibed, TCM and Ayurveda along with the modern system of medicine. Uh, when we talk about cancer, this is a segment, This is because of unhealthy food which we have been taking over last many years. I think organic farming is going to play a major role in shaping up healthcare in coming years. So that's my take on different segments of healthcare as of now.
Wonderful. Thank you. So now coming to thereby, assimilating all of this and, what does it mean in terms of shift, if at all, anything in the investment philosophy that we are going to see here on in the new normal, like a lot of you kind of spoke about. And we did touch a bit about near and midterm liquidity, but honestly, what to expect, and if we can be clearly dividing those thoughts into early stage and late stage. I know Zafar did mention that while the investments will start coming in the 6 to 8 month period, but by the time it comes to startups, it might actually see traction only a year down the line. So just want to kind of get views around the table on both near and midterm liquidity, as well as the shift in investment philosophy thus far, and how do we see it change?
Yeah, I think in investment philosophy, I'll again tackle stage by stage. The VC. So what has happened till now is that a lot of private equities and funds have suffered because of lower valuations. Okay, everything has gone down. People are suffering. Funds which have invested right at the top in bigger hospitals, I think they are starting to mark down their valuations by 20 or 30%. So they understand that it's a tough situation. The capital raise has slowed down. Okay, so in 2017 to 2019, we had a tremendous amount of capital raised by private equities. That has stopped now. Okay, the VCs are suffering because the companies themselves are struggling. Okay, and the problem is that most of the funds are seeing their companies in a cash crunch, especially the hospitals, because the thing is that they serve a lot of insurance patients. Okay, either the hospitals are like bigger hospitals, which I spoke about, which do a lot of electives and they may make money from elective surgeries. That money has gone. Okay, the hospitals are shut down, and the fixed costs are still going on in hospitals. Unlike other industries which have opted to shut down. Okay, hospitals cannot shut down, but they're not getting any revenues. So the thing is that a lot of these hospitals, a lot of these bigger hospitals, and a lot of these healthcare businesses are now facing cash crunch. Okay, and the private equities or the funds, they have to put in bridge capital, or they have to finance at really high, or the businesses have to finance at a really high rate. So private equities are basically, there has been a change of investment philosophy, as you mentioned, after the funds and after the private equities have seen this happening. And so if you take stage by stage, I think the VC capital, as Zafar mentioned, I think that will suffer quite a bit. Daily, we get at least 2 deals, okay, saying that we are working on this innovative drug. We are working on, coronavirus drug. We are working on this drug, and it's an innovation molecule, and we just keep it aside. Because first of all, frankly, we are not a VC fund. But even if it were a VC fund, I think things are so uncertain right now that people would like to see certainty in revenues, or certainty in the businesses have just not crossed the proof of concept, and now the VCs and private equities want to see that the business crosses the proof of concept stage, and then they will put money. So that's on the early stage companies. On the late stage, I think we are definitely looking in the sectors which I mentioned, first of all, and secondly, I think we'll be looking for companies which are more asset light, and which do not have big balance sheets, which are more asset light. The business model is much more flexible, and the business model is scalable with the help of IT. So accessibility, scalability, and quality would be the 3 big parameters of what we will be looking going forward.
Yeah. Great. It almost felt like you defined Meadow, but fine.
Yeah, I mean, I think Meadow is a good example anyway, isn't it?
Yeah.
You guys have provided access. You have a scalable model. I think I mean, obviously let's not share the numbers, but I think it has become very scalable now.
Yeah.
But and it provides a quality treatment. So I think you guys do, and those are the three, I think, basic pillars where the healthcare investment will move. So you need to provide scalable, you need to access a lot of people, and you need to provide a quality treatment to people. So
Yeah,
that would
maybe
be the kind of,
maybe just add. I think you picked a very interesting point. The money is going out of the entire value chain, and so to be blunt, most of these investors, VCs and PEs, have transformed themselves into financiers now. So technically, what they're trying to do is putting money where the liquidity crises are, basically bridge loans, as you just mentioned. With that kind of an environment, the innovation has to be really tangible in a real sense. It cannot be an idea that takes 2 years to get into some form of presentation. It needs to be asset-like. I totally agree with you, but something that can generate results within a short period of time. Now, I was looking at what would be the future look like, right? And to be honest, there are new business norms that has been evolving, right? And there are distinctly three types. I would just highlight it one in a very short couple of minutes here, and this happens for the next 2 years. So in the startup community, or the slightly newer organizations who are trying to expand have to focus or pivot into broadly into three areas. Number one, we all know that from now on, virtual will be the real world, period, for everything. And that has had a monumental impact on the healthcare. So the structural shift in care models and the physical plant and patient experience is completely shifting. Anyone of the ideas that could enhance this experience across this virtual world would be the uptake. So we need to start looking at which type of ideas that will eventually gain some traction, and those needs to be more or less around this world of virtual across the board. Then if you look at how would you go from getting attraction to a real fun, and then eventually increase your presence in the real world, they have to do it back to the investment philosophy, in a completely uh, complex environment of having to give a much larger stake for the relatively lesser funds they're going to receive in this period versus what they're normally used to in the past. And especially in the last 5 years, when there was a flux of funds in the investment community, the PE and the VC firms have been flattening money. But now world has changed. So the investor community has to start looking at it in a very sharp ideas, and at the same time trying to buy out a much larger stake in a very smaller part of money that goes into this firm. So all the startups have to now start probably mind shift the way they seek money and then the way they work towards this goal. And thirdly, if I have to conclude on this topic, any idea which is just a local idea will not survive. It has to be a real global idea which has a potential to scale, which is what Najin has clearly said. That I totally agree with him. The scalability of the ideas would be the last piece of hope that startup companies could have if they want to raise funds in this particular environment. And let's be prepared. It's not going to be next few days or few months. It's a long haul story. So it's a new normal. Let's get adjusted. Startups have to wake up for the new reality that might emerge in the next year or two. That's a few cents from
So
my
this
side.
is
Yeah,
this is Akhil. So Saurabh, if I may jump in,
please.
I think fascinating insights from the panelists. I would just offer 4 points and a bit of a contrarian view just to spice things up. In general, I agree, and very great points. But looking at the past, for majority of the investors, my personal analysis, the vintage at the time of crisis is probably the best vintage when you look back, because of more modest valuations and people being more realistic in their expectations of what the multiple would look like for a fundraise or for debt to equity swap, as the things might be. So if we go in with that mindset, not maybe the next 6 weeks, because it doesn't seem that way, but at least 3, 6, 9 months from now, the investments that one would make, would speculate based on past record, would be probably the best return investments in a long time from a vintage standpoint. So that's my positive spin. Second is, you know, always try to look at the crisis from outside your zone. For example, if you go for shopping when you're hungry, you end up buying more than you need. Same way, when you're in the middle of the crisis, the doom and gloom appears more severe than what it is. What I mean by that, 1 week after the travel restrictions were over in China, there were travel packages. People were back in the malls. You see in Spain, within a few days of the restrictions being out, people are back on the beach. Now, there is a risk of the second wave, don't get me wrong. I'm not suggesting any foolhardy. But what we view as the world in lockdown, or as we are fighting or flattening the curve, is different than how people will react when restrictions start opening up. And trust me, as we have seen from other parts of the world, things do improve. It's just a matter of time. It's not, whether, it is when. The third thing is, I believe many of the trends that we are observing are there to stay, but they may not have the scale to become mainstream. So instead of purely pivoting towards a virtual or a digital, it has to be omni-channel. And the reason I say that is the lessons for the healthcare industry will come from outside the industry also. For example, car dealership networks are embracing a digital outreach model to schedule appointments for people to come in at a specific time in a very quarantine environment to test drive their vehicles in geographies that have opened up. And because of safety concerns, people are trying to buy own cars rather than go for rideshare. So who would have imagined that 3 months ago? It is possible. Same thing with elective surgeries. I understand medical tourism will come to a halt because if the borders don't open up, people may not travel, but there's still a way around. Lastly, I would just submit that for early stage startups, it is a philosophy of capital meeting growth. If you combine these two, then you have a winning formula. And if you can answer 3 basic questions: what does your startup solve in the life of a potential client? What do the unit economics look in that individual transaction? And 3, is the model, as we've all discussed, scalable with a path to profitability and eventually cash flow positiveness? If you can answer these 3 questions, you'll have enough capital to meet growth, because there's still people looking to put capital to work.
Right. No, I think I fully agree. In fact, those are 3 cornerstones of any early stage organization. And more often than not, we're at least trying to find answer to one of those pillars, and not more, right? So I think for me, the way I define it is that till the point you only have one unknown, you still got a shot. But if you have 2 or more of these 3 pillars as unknowns to you, then God be with you. Yeah. So thank you for that. I think my last question, and we can all pitch in, is thereby as entrepreneurs, and I'm being selfish with this last one now. As entrepreneurs, how do we prepare ourselves? Because we've still got a business to run. We still got places to show up to, and returns to generate. So how do we prepare ourselves? And maybe we can start with Dr. Vishal and then open it up to everyone. Help us.
Saurabh, I'm in the same capacity as you right now and struggling with the same questions. My investor mode has come to a halt and just before COVID. So I'm struggling with the same questions. But I think the answer to some, or I could say rather an indication, comes from all the talks that we have already had. Akhil's last suggestions about generating true value and answer to those questions is something I think we should take always keep in mind. But I think the real question which comes to my mind is what Zafar mentioned, the uptake. It's something if we are if it is something if we can have an uptake on, I mean that's the key reasons. Our clients, if we can drive users to use our product or services, whatever we are doing, even in this COVID times, if it suits that, or if we can pivot into something which suits, or the model or the uptake, the omni-channel approach, wherever we can draw uptake more and more. I think that's the key to all of it. To every question around here is that uptake of medical services, drugs, or any other products, consumerism, that's being challenged in every place. So the key lies basically in uptake. So if we can draw more and more of our clients to use our products and services, we should just focus on that. And that comes from generating, I guess, true value and a good distribution approach. So my focus, if I were in a, I mean, I am currently, but I'm still not at that stage. I'm just preparing to launch something. Would be to focus on inherent value and distribution approach that helps me reach and engage clients as much as possible.
All right. Other opinions on this?
I think if I have to chip in here, there's only one statement which makes it more resonating today than ever before. Cash is king.
Yeah.
So any model what you produce today, if it's not generating cash in the near term and the short term period, will have to take a lot of heat. So my advice to most of my the startup communities where I'm advising them is now more than ever, look at your models, evaluate it carefully, look at it in a very short to medium term, and see where is your cash flow coming in from. Focus on that. While you can preserve and maximize your marketability, your valuations, your sales, and your margins, which are very important factors for you to survive and grow in this startup world. But considering the situation for the next, I would say, a year or so, revisit your models and see where you can enhance your cash flows. Make sure that you have protected yourself in the supply chain, where you should not be getting exposed to high receivables, and should not be exposed to your debt situations. And try and focus again and again, where is your cash going to come for the next cycle? And that would be my one single statement for this particular advice to you.
Right. Thank you. Now.
Yeah, I think I totally agree. I think if you see both the sides, on the client side, I think on the customer side, as I mentioned before, I think scalability, accessibility, and quality should be the three key pillars. And on the investor side, as Zafar mentioned, I think go into I think Mr. Puri also mentioned, go into unit economics, understand each and every line of the income statement, balance sheet, be confident of every line and every figure. Make sure you have even if it's not positive, but at least the certainty about turning to be cash positive within short term should be really, really certain, so that people have confidence on that number, on that timeline. And it will be great if you display short or small victories to the investor, saying that our target was this, we achieved this. Those small victories actually inspire a lot of confidence to the investors. Okay, this guy projected this revenue, got this revenue, great. Okay, this guy is on track. I think that inspires a lot of confidence. And as Zafar mentioned, I think cash profitability, break-even point, I think those should be really, really clear, and should not get into too much debt, because in India, the working capital or debt is anyway quite costly. You cannot run a business on leverage in India.
No, so, absolutely. Yeah. In fact, I quite want to double down on that point of of having small victories, because it's very important not only for your investors, but both as organization leaders and your organizations, right? Because in all of this doom and gloom, one thing you need is to at least be able to celebrate some small victories, to keep the morale going and keep the troops charged up. So fully agree, and thank you for that. Akhil, please, sorry, I cut you off.
No, perfect. And this is exciting. And I echo pretty much all the expert comments from the esteemed panel. I would probably break it down into now a bit lower down tactical components, because some of the promoters, entrepreneurs I deal with, they say, Akhil, our business model needs cash burn to build up the business in the next 12 to 18 months. So how do we survive? Because it's not about cash flow positive, because our model was cash burn till we get a certain scale. And so there are 4 practical points. One, what we work with the clients on is make robust what-if scenarios and understand how severe the crunch would be at a weekly level, especially at those peak points where you have salaries or some critical payments, to understand how stretched your balance sheet or covenants or any other challenges would be. Robust scenario planning at a kind of a weekly update. Point number 1. Second, focus on the core, because any business plan for an entrepreneur has some linear, non-linear breakouts built into the model, some aggressive, some modest. Pivot based on your scenarios to take risks that are more closer to your core rather than a bit more adjacencies or blue ocean oriented. Third is be very mindful of how you pilot, keeping in mind the scenarios. Because as you pilot new geographies and new channels, generate leads, convert the leads, there are some geographies or segments or catchments that you pilot in. Be very robust to time those with the scenarios, so that if God forbid your pilot doesn't go well, you still have a backup rather than unknown. Lastly, I repeat this point from earlier. Look from outside your industry and geography for lessons learned. See what's happening in Spain or Italy first 2-3 weeks or a month after lockdown is over. What's happening in Singapore? What's happening in Japan? What's in Korea? What's in China? How have those geographies responded, versus just read about the doom and gloom that you may read in your local newspapers, because they are seeing life post a very tough, tragic lockdown, and that can give lessons learned and look at other industries. And when you combine these 4 tactical approaches, I think in combination with what the other esteemed panelists mentioned, we start a bit more sense out of this doom and gloom.
Sorry guys, I need to leave actually. So it was a
please.
pleasure. It was a pleasure meeting you all. Let's keep in touch, and thanks for the session.
Thank you. Dr. Sachin, we are anyways towards the end of it. Thank you, Nav. Thank you for your time.
Thank you, everybody. Thank you, welcome.
Dr. Sachin.
Yeah, so I think, Navjeevan, Zafar, Dr. Vishal, and Akhil actually outlined and, pointed out most of the points. But yeah, one of the things which I'd like to outline is, as a startup, the founders need to build a very strong bridge between, with both external as well as internal stakeholders. So as far as internal stakeholders are concerned, we need to very, very clearly, communicate to them as far as, cash situation is concerned, or how the situation is evolving, so that they are engaged with us, so that they understand that the promoters or the founders, they are being very transparent. That will have long-term positive effect on their engagement with you. Also, as far as external stakeholders are concerned, we need to set right kind of expectations in terms of delivery. We shouldn't overcommit at this point of time. We should actually tell, this is what we can deliver. So if we are able to communicate and build bridges with the external and internal stakeholders rightly at this point of time, we are going to emerge as a winner. Yeah.
Wonderful. Thank you so much. I think last 5 seconds for everyone for just giving final thoughts. Akhil, if we may start with you. I think you're on mute, sorry.
I don't want to take time away from some questions. I don't know if the other panelists have time. There are some questions we should answer those.
Yes, maybe. I have 2 questions here. So if anybody else wants to kind of put up questions on Q&A, we can, by the time we summarize, we can take a couple of questions as well. Zafar?
No, I think so. We are good. Let's straight jump to the questions. We are top of the hour already.
All right. So I think one question is around what are the opinions about integrated remote elder care using telehealth, IoT, e-pharma. So I think something we were talking about in kind of virtualization of services. This one is specifically talking about elder care. So if anybody wants to take this question. Yeah, maybe Zafar, because you were specifically talking about virtualization. Yeah.
Sorry, Saurabh, can you rephrase the question? I'm just trying to
So they're
understand.
basically asking what are your opinions on integrated remote elder care using telehealth plus IoT and e-pharma, whether that's something that could work, not work, how?
No, I think that has already been working, right? As an industry, it has been evolving for last 10 or so years. A lot of investment went in, but there was not really an adoption rate. And COVID kind of has pushed us towards that, and it has accelerated the whole process in last few months. The way these 3-4 things have come together, which is your virtual connections, your pharmacy, your diagnosis, and your healthcare in general, uh, I must say it's already there. It has come to a tipping point. Um, it will go in a much more explosion mode the moment we get into the new normal. And if there are any ideas in this particular space which could enhance, combine the entire value chain and pull these dots and connect this data together, it would be an interesting composition to look at it. And those are the real startups going forward. There's no question about it. It's already been proven, it's been adopted, and it will have a big future for down the line.
Right. And I think there was another question around implementation and feasibility of telemedicine and e-pharmacies. I think in suburban and rural setups, I think we did discuss it as part of the discussion, that it's something that we are all really stoked by and look forward to, but the regulatory framework is something that's still not fully clear, especially when it comes to e-pharmacy, and how that plays out will play a huge role in how successful some of these models become. One more question. Sorry, please.
Saurabh, just would like to add over here, telemedicine has been around for several years. COVID has pushed it. To me, there's one challenge which still needs to be solved around here, which is in primarily telemedicine is being done B2C, or the models that we see. The unit economics is still something that we need to look into. That's a problem still to be solved. Let's hope it gets solved, but that's still something, while the basic idea is not a challenge any longer, the economics of it is still something that we need to go into detail, and let's see how the models evolve around that, especially in the B2C space.
Right. And there's a question from Dr. Gori, which says that what would be the new healthcare branding and marketing models in the post-COVID era?
Sure.
Yeah.
So Vishal here. I guess when we talk about healthcare and branding, there are 3 or 4 different segments. Again, 2 primary segments over here are pharmaceutical and hospitals, right? So as far as hospitals are concerned, I think there may not be any huge or disruptive changes in the marketing and branding. More and more, a doctor-focused branding might give more weight to a hospital brand-focused branding comparatively. So that's my general take on that. But however, the pharma branding space might see a significant disruption in the coming years, according to my thought processes. First of all, primarily the target audience for pharma branding and marketing is the doctors. And the primary channel for that is 2, which is first the medical representatives, and secondly, the continuous medical education events that the pharma industry conducts around various spaces. both of this might have a challenge in the COVID times, and some of this might even linger on in the post-COVID times, or a behavior change might be visible there. So what I see is that several pharma companies have been trying to explore e-channels to establish branding, patient advocacy, post-marketing surveillance, etc., drug monitoring. And we might see that sharply rise in the COVID times, and may even see it the trend continuing towards the upside with a small low down in the immediate post-COVID period. But it might still be a long-term quickening of the process of a complementary channel to the MRs and as well as the events. So more and more CMEs will go online, more and more direct to doctor marketing would switch for the pharma industry to the online channels or e-channels in several ways. Several of these models have been there in various economies, but this might really be a big push. COVID might bring in a big push in this time period.
Wonderful. So the last question that we're taking is around startups in lobbying for preferential tax breaks for medtech companies. I think I would much rather make it a bit more broad based and not specifically talk about lobbying, but generally, our views on using some of these incentive structures, whether it's in terms of tax breaks, etc., to both promote technology in healthcare, which is we all have agreed that has been lagging, and also kind of use that to enhance a few more manufacturing and innovation, I would say, when it comes to healthcare technology and devices. So any opinions around that? Anyone?
Yeah, I think I would say that as we try to come out of this crisis, especially in the economies that are very hard hit on the employment side, it is important to pivot towards what we all talk as the new norm. But what it means is really driving innovation that will allow an omni-channel delivery of services. Second, we will leverage the industry 4.0 tools like the IoT enables for better diagnosis and using data for better clinical outcomes. And three, leveraging the power of digital to be able to drive some AI-based solutions to kind of reduce the challenges and improve the clinical outcomes. And my sense is anything that the powers to be can do to incentivize innovation in these areas will go a long way. However, I've seen in the past such incentives fail to deliver results if the entrepreneur does not focus the three fundamentals that we discussed. Unit economics, what does it solve for the person, and eventually how do you scale it up to become profitable? So, it can get you kickstarted, but it can not sustain. So that the entrepreneurs have a responsibility to answer.
Right. Wonderful. With that, sorry, Vishal, did you want to add something?
No, that's fine.
Good. All right. Thank you so much for such an amazing discussion and for all your views. I think it was absolutely astonishing discussion. So thank you again, all of you, for your time and enlightening all of us. And thank you everybody for watching.
Everyone.
Thank you, Saurabh, and it was wonderful. Bye-bye. Stay safe.
Thanks. Bye.